Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be having an awesome session as we try to understand what happened in the markets yesterday, what are the key events that we'll be trying to understand, or the ones that will be moving the markets today. And of course, we'll do some technical analysis to understand where the markets might be headed next. So once you join in, kindly say hi on the live comment section. If you have any questions or comments, feel free to use the comment section and I'll be responsive as always. So I'd like to begin with a disclaimer. This particular session is not investment advice. It's not a recommendation to trade. So you should always do your own analysis and practice proper risk management. So let's get things started. So I'll be starting with a view of the economic calendar in trying to understand the key market events that happened yesterday, and that was Wednesday, the 21st of February. So we started with slow news that didn't have much impact on the news. This includes the producer prices in New Zealand, which improved by 0.9%, whereas for the output, producer prices also improved by 0.7%. This is often a good indicator for the economy, but not very good indicator for the inflation fight. So we know that central banks around the world have been fighting inflation, and some of the key factors to consider includes producer prices. So if they are moving up, it's often a signal that consumer prices might also be headed higher. And this is the same trend we are seeing across board, where consumer prices are remaining significantly high, leading to central banks holding rates higher for longer. And as a result, we have seen strengthening global currencies with the dollar leading the way. So the wage price index for New Zealand also came in at 0.9% as expected. And then later towards the end of the day, we had the FOMC meeting minutes. So this was the most anticipated news for the day. So we didn't have much, but the Fed was clearly concerned about cutting rates too soon. And this mainly as a result of the inflation reports that we've been getting over the last couple of months. And all these reports have been indicating that inflation is very sticky, above 3%, whereas the Fed target is about 2%. So from this article on Reuters, Fed concerned about cutting rates too soon, minutes of January meeting show. So the bulk of policymakers at the US Federal Reserve's last meeting were concerned about the risk of cutting interest rates too soon, with broad uncertainty about how long borrowing costs should remain at their current level, according to minutes of the January 31st session. So participants highlighted the uncertainty associated with how long a restrictive monetary policy stance would need to be maintained to return inflation to the Fed's 2% target. So this basically implies that the Fed is ready to continue holding interest rates higher for longer, and this has the overall effect of strengthening the dollar. So one key indicator that I tend to use is US bond yields. So I'll try and do a quick search here. So just a moment. So as you can see from this list of various bonds issued by the US Treasury, you'll notice that there's quite a number of bonds that have flied above 5%, meaning that there's a lot of demand for US Treasuries. So for the 1-month Treasury, as per the price yesterday at the market close, it was trading at 5.493%. So 2-month Treasury, 5.485. If you look at the 6-month Treasury, it's 5.37, and the 1-year Treasury is 4.991, very close to hitting 5% again. So the one that is yielding the highest is the 3-month Treasury with 5.5%. And when you look at a longer-term Treasury, then you can see that the 10-year bond is yielding 4.311%, clearly indicating some form of a yield curve inversion. So yield curve inversion refers to a situation where investors are more willing to lend to the government for the short term and more unwilling to lend to the government for the long term. So in this case, you can see that the long-term bond yields are yielding much lower. For instance, the 30-year bond is 4.48%, 20-year 4.591, 10-year 4.311, and when you compare with the short-term yields, you can see that the yields are much higher. So this shows that investors are more willing to lend to the US Treasury for the short run compared to lending for the long run. So as a result, what we normally see as an outcome out of this, it's the trend and the considerations that investors are making in the markets. And the trend is basically showing that investors expect in the near term that the US will continue holding interest rates higher. But in the long term, they expect the US to cut interest rates, which would have an impact on yields. So there's been an overall expectation that at some point the Fed will be cutting interest rates, and investors have been following various data, including the job market report or the NFP. They've also been following retail sales data, the inflation reports, and all of them are suggesting a very strong US economy and a very strong potential that the US could potentially get to a certain level where it considers cutting rates. And that is if inflation drops towards the 2% target. So without that, there's that consideration that rates could stay higher for longer. And as a result, we could continue seeing the dollar dominate other currencies. So on other news, we have seen the Nvidia earnings this morning. So remember, Nvidia reported its earnings last night. That was after market close at around 11 p.m. So Nvidia crashed earnings. Top analyst says it's another drop the mic movement that confirms the AI revolution. So what we saw in terms of numbers is very easy to understand, but also a big surprise in the market. So Nvidia turned in first quarter revenues of $22.1 billion on Wednesday, up 265% from a year ago. Compared with analysts' consensus forecast for 240% jump, so the market was expecting to see 20.6 billion. Nvidia delivered 22.1 billion in revenue. So adjusted earnings per share rose 765% from a year ago to $5.15 per share versus a consensus forecast for $4.64 per share. So clearly, the earnings beat the expectation by about, I would say, $0.50. And gross margins, a key profitability metric, continued to rise in the AI boom, hitting 76.7% in the quarter. So as for the outlook, this is what Nvidia is expecting to report on the next quarter. It was revised higher. So what we saw was that investors were expecting Nvidia to extend its outlook for the next quarter by $22.5 billion or to $22.5 billion. So the outlook that was announced by Nvidia was higher than this. So the company expects to report revenues of $24 billion in the current quarter. So this is quite big growth for the company. So we all know that Nvidia supplies some of the top chips in the industry, and the majority of the companies competing for the AI generation, they heavily depend on these microchips from Nvidia. And as long as this demand continues moving higher, the real question we will be asking ourselves is whether Nvidia can meet this demand. So while this demand-supply imbalance continues, then the price of Nvidia chips continues increasing, which leads to more profitability for the company. So it was one of the best performing companies over the last year. And then this year, it has made some significant gains. I would say this is quite crazy. Since the 1st of January, the stock is up 40.08%. And then after last night's announcement of earnings, since the market was already closed, remember the earnings were just after market close, the stock was traded in after hours trading, and it's now up 9.07%. So yes, the closing price yesterday was $674.72 per share, But then as at the market open today, we expect to see a big gap and the shares open trading at $735.94 per share. So that's quite a big surprise in the market. And we will be expecting to see more analysis about the stock. And this is one of the stocks that is holding the stock market really strong. So hello, Jason. Hello, Drew David. I can see Abdirahman in the house. Hello, Robert. I can see Manabasto, Butin, as well as Tony. Thank you guys for joining, and thank you for your comments. So we continue. Hopefully, we get to gather some good insights today as we anticipate the market movements for the rest of the day. So I'll be switching now to the MT5 trading application and try to understand some key technicals in the markets. So the first things first is that after the Nvidia company reported earnings last night, we saw a very strong momentum of reversal in the Nasdaq index. And this is something we had discussed yesterday. So if the market was correcting and moving further back downwards, so remember for the Nasdaq, it had never broken this trend line until earlier this week. So the trend line had held since the beginning of the year, was the key level support for the Nasdaq. Then the Nasdaq broke the trend line here, kept going down. But then last night it made a very strong and upright reversal. And with the market expecting Nvidia to be up 9% at the open of the market today, then there's a resumed strength in the market. So people are very confident that the AI boom is real. And as a result, we have seen a very strong reversal and the market is right back inside the trend line. So sometimes we get lucky to meet these changes as they happen. And now that we see that the market has resumed and is back inside the trend line, then the expectation is that this momentum continues and potentially gets to the previous high, eventually forming an all-time high for the Nasdaq 100 index. So I also expect to see something similar, especially on the S&P 500. So after breaking the lower trend line, you can see how the market bounced from this level, made quite a rally, and today has continued, and we are now on the verge of forming another all-time high. So the market is close to beating the all-time high of $5,048 per share. And from the daily chart, we expect the market to break that and potentially continue moving higher than that. So the Dow Jones has not been left behind. So from what we are seeing here, after the market began forming lower highs, now the market has cruised above that, and now it's on the verge of heading for another all-time high. So I expect to see the market breaking above this area, and perhaps by the end of the day, we could be seeing another all-time high for the Dow Jones index. So those are the most interesting positions today, where we see a resurgence of bullishness in US equity indices. So as for the gold, we know for gold traders, we have been trading inside this triangle for quite a period now. So the market made a break towards the lower side and then recovered over a sequence of days. I believe this was 5 days rally to recover the big sell-off that happened Tuesday last week. And then we had some sideways momentum yesterday, and now we are seeing gold resuming bullish momentum. So now that it is right back inside the triangle, the expectation is that now the price rallies towards the upper trend line. So from here towards the upper trend line, I expect to see a price target of around 2047. So this is the expectation for gold, that it now rallies to the upper side of the trend line. And once we get to 2047, now we start testing on whether gold will be breaking higher or changing direction from this moment onwards. So that's quite a key expectation for gold. So as for the dollar index, immediately after we saw the announcement of the Fed meeting minutes, the market reacted by betting that the Fed might be closer to cutting rates. And as a result, we continued seeing the dollar weakening against other currencies. So from this momentum, we can see that this morning the dollar has been weakening against the Japanese yen, and this particular triangle was broken to the lower side. The market kept pushing higher and is now pressuring to move further back downwards. So if you notice the upper trend line here, it had been holding quite well. So the market attempted to break this trend line in a push to form a new all-time high for the, multi-decade high for the USDN. Then this didn't hold for long, and we are seeing the market resuming the bearish momentum. And now a key level to observe would be the low that we have been seeing across board over the last couple of days. And somehow it ranges between 149.877 and this area here, somewhere along 149.774. So we expect to see the yen making some gains against the US dollar as long as we continue seeing a weak dollar in the market, and this seems to be happening across board. So major currencies are making a strong rally against the dollar. For the euro, we have seen the breakout of this particular trend line that was holding for quite a period of time, I would say since the beginning of the year. And now with the euro making a run for it, I think it's approaching a critical level, and the critical level is the previous high right here. So once the euro USD gets to 1.08939 or roughly close to 1.09, then we'll be looking for signs if there is a further bullish momentum in order to target the next potential level, which is slightly higher than that, around 1.09266. So from the 1 hour chart, this is how it looks like. So the market is almost hitting this high. So we observe the price action around this area to see if there's a reversal or if the market will continue along that direction. So for pound USD, also a very strong bullish momentum. It has cleared two key resistances. We have seen the first resistance here, it has been broken. We had a resistance here, it has been broken, clearly indicating the strong bullish momentum. So now if you zoom out, you'll notice that the next available resistance is somewhere along these areas, 1.27460. So expect to see some further upside momentum for the pound and potentially the market reaching 1.27460. So as for USD CAD, we're seeing the dollar losing some ground against the Canadian dollar. So if I remove my earlier analysis, you'll notice that we are approaching a key level support, an area that has been working as support for the USD CAD pair, and we'll be observing what happens in the market when the price gets to a price level around this area. So if there's a clean break, there's more room for downside momentum, and we also expect that the market could also potentially bounce from this area. So this is the area we are observing, but for the short run, anyone who is scalping, there is a potential opportunity that the market will eventually get to this area. So on the other hand, if you look at Brent oil prices, we had this crooked diamond formation being formed here. Market broke towards the lower side, pulled back, and then continued. But then we are seeing a very strong recovery. And now what we are seeing here, having broken off the diamond, is a market that is very, very strong and pushing to get to the previous highs. And the previous highs or resistance seem to be around this area, $82.948 per barrel of oil. So this is the expectation for the day, that the bullish momentum continues and eventually gets to this resistance. So European equity indices are making a run and forming all-time highs. So for the Euro 50 cash index, you can see the strong rally that we are witnessing. So this is expected to continue for the day. French 40 index making a big jump from this area and forming yet another all-time high. So we expect this to continue for the rest of the day. And then for the USD against the Swiss franc, you can see the dollar losing some ground. And now we are about to get to a key level of 0.87251. So once the market gets to this area, then we start observing if there's signs of continuation or whether there will be some form of weaknesses around this area. So for New Zealand USD, it's the same thing. It managed to pull back as we had expected here, bounced strongly, and is now continuing the momentum upwards. And of course, you can see some level of confidence around this area where the market was unable to break for quite some time. So the expectation is that the market potentially continues with this bullish momentum and eventually gets to this area. So as for BTC, we are still trading within the range. Nothing has changed. So we're just moving from the lower side of the range towards the upper side of the range. So perhaps we'll be seeing some more correlation between BTC and equity indices. And the expectation is that the market continues with this bullish momentum and eventually gets to the upper side. So that's it for the day. I'll be looking to see if you guys have raised any questions. And if there's no questions, we leave them aside or we end the session. But if there's a question, then I'll be looking to answer that. Hi, Tony Coril. Good question. How do you tell at what exactly time earnings are released? So earnings really depend on the market you are trading. So if a stock is listed on the NASDAQ, then you can always tell by checking the NASDAQ website because it will have an earnings calendar. So I'll give you an example. Let's see how we can do this. So kindly give me a sec. So let's start with earnings this week. I prefer using Kiplinger. It's a good website that will give you a highlight of the earnings for the week. So today being Thursday, these are the companies that we're expecting to be reporting earnings today. Sorry. Yeah, Thursday, the 22nd of February. So we have companies like Accobrands, Alarm.com, American Homes, Arcadium, and so on. So I want to just choose one company that you probably know and have potentially traded before. So let's find something that everyone can identify easily. Seeing quite a number. Yeah, let's start with Moderna. So you can literally just Google Moderna earnings. And then just add NASDAQ. And then you will see this page here. And it will basically give you the exact timing. Sorry, I think I chose the wrong one. Yeah. So you'll see this is a Moderna earnings date. Earnings announcement is February 22nd, 2024. So Moderna common stock is expected to report earnings on 22nd February before market open. So once you realize it's before market open, then you will have a report before the market open. So you'll be able to react at the same time as everyone. And that is exactly when the market opens. So earnings are mostly either reported before market open or after market close. So the other way you can do this is going to the company's investor relations site. So most of the publicly traded companies, they will have a section on their website that is segregated or dedicated to the investors side. So this website, part of the website will not be talking about the company's activities, but more about financial statements, meetings, and so on relating to the investors for that company. So I'll try and do an example here. So we can see Moderna investor relations. So all you have to do is to Google that, and then you'll get that page on your search results. So in this case, we have this page, Moderna Investor Relations Overview. So if you look at the website address, it's investors.modernatx.com. So this is where you'll get the latest news about the company. So latest quarterly results, viewer results, And when they have an earnings call, you can always find it on the investor relations site. Is there a Zoom session for beginners? No, we don't have that. What we have is a ready-made course available on YouTube. So just go to FXPesa YouTube and under channels, basically check for the Novice to Pro series. It's a 10-episode course that I developed, hopefully to help a beginner transition from a novice to a pro-level trader. You're no longer using Zoom. Yes, we shifted to a different presentation environment. Hopefully this is an upgrade. Can you be a profitable trader just by using price action only without using indicators? Yes, you can. When it comes to analyzing CPI, how do you really determine with which side the market will take? You basically trade the price that you can see, but then when you're analyzing a CPI report, you're trying to understand what the central bank will do once it sees the CPI report. So in this case, we know that central banks tend to have a bigger control on the direction of the currency. So consumer price index report is an indication of inflation in an economy. So if inflation is moving in a certain direction, say higher, then you expect the central bank to, let's say, increase interest rates. And as a result, you tend to see the currency strengthening. So I think I've significantly covered this in the Novice to Pro, looking to understand fundamental analysis. Yes, it is possible to be profitable without using indicators. Thank you, Lamik. And I think that was the last question. I appreciate everyone who participated in this session. Thank you for your questions. Hopefully, I was able to provide value to you guys. See you on the next session. So remember, we have yet another session today. It will be happening at 8 p.m. It's a Market Pulse series. And on this session, we will be discussing the overall performance for the week and what we will be expecting to see in the market on Friday as well as the following week. So thank you guys and see you on the next session.